One of the more interesting and controversial questions that arise in financial markets is, what is the true price or value of silver? Many silver investors believe that the investment asset of their choice is undervalued relative to fundamental factors such as the supply of money circulating within the US and global economies or the rarity of silver against other natural commodities. Many individuals have turned the silver guessing game into its own microcosm, each egging on the other as one overly optimistic forecast is outdone by another act of audacity. However, there's very little quantifiable or scientific basis for a majority of these pie-in-the-sky numbers. What I intend to show you in this video are 3 steps that will illuminate this ongoing mystery of silver bullion. The first step is to recognize bias. We all have bias, and it's not necessarily a good nor bad thing. However, it may cloud our judgment and discernment. Specifically, anybody that buys silver or buys an investment vehicle believes inherently that the price will go higher, otherwise why buy it? So it's imperative that we recognize the bias of the forecaster and the bias of his or her target audience. The second step is to understand the difference between market value and speculative value. When you buy silver at $20 and you think it will go to $40, the $40 is considered the speculative value. It's any number that you believe based on any particular reasoning or even no reasoning at all what your investment is worth. Market value, on the other hand, is what somebody will actually pay for the asset. In other words, market value is real value or the real price. The third step is to quantify market value for silver. We do this by identifying a large data set, such as quarterly market returns, and use this figure as a barometer to categorize at what price thresholds a majority of market activity occurs. When we do this and adjust the analysis for inflation, we find that the true market value for silver is approximately $7.50. This is simply the price where silver finds the most negotiations between buyers and sellers. The next highest area of trading activity occurs between $15 and $23. Beyond $23, however, is where the silver market becomes entropic. This means the dispersion of negotiating activity between bulls and bears are random and extreme. Statistically speaking, there is a higher probability, but by no means a guarantee, that silver will only stay at elevated price points relative to its true market value for a short period of time. Now, short could mean a year or 5, we don't know. We can only state that silver has very little historical activity at price levels beyond $23. This is not meant to discourage anybody. Silver can go to $100 and beyond. I don't control the markets. But what I can say with a great deal of confidence is that silver at its current price would not be considered undervalued. Therefore, the opportunity to arbitrage against established market valuation is long gone. What current silver investors are banking on, whether they realize it or not, is the increase in speculative value. This may lead to a lucrative investment, but at the same time, investors need to recognize that speculative runs are almost always ephemeral. Stop taking blind swings at the market and instead receive the best stock ideas with the highest probability of success. At Bullish Money, we want to put more cash in your stash using scientific algorithms. No opinions, no interpretations, no nonsense, just straight facts. To get started today, subscribe to the Bullish Money YouTube channel and get actionable stock ideas right to your inbox.